Welcome back to the Milwaukee Real Estate Update. We're covering what happened in July 2022 and how it's going to impact your real estate decisions. I'm Ty Ash with Houseworks Collective and Compass, your local real estate expert. I'm here to give you the info you need to make sound financial decisions regarding your real estate. Jumping into current events and national highlights, our national housing numbers, 747,000 homes available for sale versus 619,000 homes last month. That is a 20% month-over-month increase versus June. Also, if we compare that to 571,000 homes available in July of last year, definitely seeing inventory on the rise, probably something you've seen in some of the headlines. However, for some historical context, we always compare that to 1 million homes were available as we came into the year of 2020. And as we look at 2021, we had 570,000 homes. So still less inventory compared to coming into the super hot market that started back in the COVID pandemic. But as we kind of relate this to our Milwaukee market here, it's a little bit of a different story. Like I said, we had 20% month-over-month growth in the homes available for sale nationally. We've only seen 5% increase here in Milwaukee. Now moving on to the inflation update, U.S. Consumer Price Index climbed 8.5% compared to July a year ago. However, that is lower than what everyone's expectations were. Looking back in time, we are still in a period that's seeing higher inflation rates compared all the way back to 1981. The biggest driver versus a year ago continues to be energy, gas prices. However, we're starting to see that slow down as we continue to see improvement in the gas prices that we're seeing at the pump. Moving over to our interest rate update, well-qualified buyers are locking in rates between 5 and 5.25%. Versus about 3% is where we could be about a year ago. Now, just a reminder here, these rates are much more closely related to our 10-year Treasury number, as opposed to the interest rate hikes that we're hearing about in the Fed, where most recently they raised their interest rates by 75 basis points, or 0.75 percentage point. Next on the list is going through our Metro MLS stats. We're going to be looking at single family and condos here in the Greater Milwaukee Area, which is our 4 counties around the Milwaukee Metro. Sold listings, 1,795 homes, down 18% versus last year. We'll compare that also to last month. We did have a decrease in the number of sold homes at down 13%. Active listings, homes that we can purchase, 3,295 homes. That's down 12% to last year. However, that is up 5% compared to a month ago. Like I'd mentioned earlier on this video, we're seeing the inventory climb here in Milwaukee on a month-by-month basis, but at a slower rate compared to the national numbers that we're seeing. We'll also pause here. I'm going to compare again. Sold listings, we're down 18%. Active listings, we're down 12. We've got a 6% spread. We are going to see as we go to our next metrics that our months of supply are going to start increasing slightly. So months of supply, 1.9 months of supply in July versus 1.8 months last year. That's a slight increase of 5%, but it's really just important to note here that 1.9 months of supply versus a 6 months more balanced market. We're still in an inventory challenged environment. Moving over to median days on market, 17 days versus 15 days last year. So 2 days increase. This is still super accelerated closing timeframes that we're seeing here in the market. Even if the home sits through the first weekend, we're still seeing a lot of homes get snatched off the market after that week, sometimes maybe with a slight price correction. And then the last stat in the single family and condo homes, median sales price per square foot, $185.50, up 9% to a year ago. And versus last month, we're seeing that hold steady where we're still at $185.90. Homes are not losing their values here in the Milwaukee area. Next up on the list for some of my investor followers, 2-family homes in the Milwaukee County area, our duplex inventory. We sold 271 properties, which is down 25% to last year. For active listings that you can purchase, there are 537 homes available, which is down 40%. That's a 15% spread here between what's sold and what is active. We're seeing the months of supply going to that metric, 1.8 months versus 3.7 months a year ago. We're actually seeing the inverse of what we're seeing in our single family and condo market. We're seeing the months of supply continue to decrease. We're not seeing these investment properties come onto the market at as fast of a rate as we are the single family and condo inventory. Median days on market, super fast, almost twice as fast as what we're seeing in the single family space. 9 days on market versus 10 days a year ago. Not much change year over year. Median sales price, $187,500. That's down 1% compared to a year ago. Last month, we were sitting at $190,000. So some might look at this number and be concerned. Are we starting to see the duplex inventory's value start to decline? One thing I'd like to note, 55% of the duplexes that were sold in July were less than $200,000, and it makes up today 61% of our current inventory. So this is more of a mix issue causing the decline in values. It's likely very similar to single family space, where month over month we're still seeing values of our duplex inventory hold. Now I want to take the time for a quick break after I just went through a bunch of heavy numbers for you to kind of digest. Have I missed anything that's important to you? Is there any national headline that you've heard that you'd like us to take a deeper look at? I'm here to answer your questions, and you can put them in the comments below. Let's kind of do a debrief of what does this mean for our buyers? What does this mean for our sellers here in the Milwaukee area? Buyers, I said this last month, we're entering a window, and that's a window, not a big gaping door, where months of supply are starting to increase slightly due to lower buyer demand. One stat we like to look at is the amount of pre-approvals that have been submitted by buyers to our lenders. We're seeing that nationally fall 19% compared to a year ago. So we have less buyers entering the market, really because of higher interest rates impacting affordability, but also just seeing decreased sentiment because of war, inflation, as well as concerns surrounding recession. Jumping back a little bit to that housing affordability for buyers, I'm going to pull up a chart here on the screen talking about housing affordability. This is from Fred, a source that you can go look up and see what this index looks like, but we're currently sitting at a 98.5. And something I kind of want to share about this is a value of 100 means that the typical family with a median income can afford essentially a home that's is median priced in their area. So as we kind of start dropping below that 98.5 versus at the beginning of this year, we started all the way up at 140. This is very much the impact that we're seeing on the interest rates impacting that monthly payment that our buyers are having to pay for the home. Another piece that I kind of just like to add some context to our buyers as well is our months of supply and how it might impact them specifically. So I always like to go in the weeds or under the covers a little bit here and take a look at the $200,000 to $500,000 price point. And what is the months of supply we see there for some of our first-time homebuyers market? It's still sitting at 1.6 months of supply, flat to a year ago, which is less than all of our price points of 1.9 months supply that we mentioned earlier, because outliers in the less than $100,000 inventory and the essentially $1 million and above inventory are sitting above 3 months of supply. Again, another mix issue that's maybe hiding some numbers and some challenges that some of our first-time home buyers are still seeing, but we're starting to see that ease up just a little bit. Now moving on to our sellers. Your home, like I mentioned earlier, has most likely not lost its value. Inventory is still very low and transactions are still closing very quickly. The best homes that are well marketed, good photography, and are priced relative to what the market expects are continuing to receive multiple offers within the first weekend or two and closing pretty quickly. We still can see in the month of July that closed transactions percent of ask price was at 102.7%. down slightly from a year ago of 103.6%. This is the case across almost all of our price points, though, that we're still seeing above asking prices close here in our market. Now, I just want to make sure to give some historical comparison here. We actually used to see this percentage to be below 100%. So we're still seeing some of that best inventory driving up that above asking price. To sum it all up, wrap this all up with a bow, if you found value in this information that I just covered about the Milwaukee area, please hit the subscribe button. I want to make sure that this information gets to you each month so you can stay up to date on any of this information that's going to be super important to your real estate transaction. Also, give us a thumbs up and a comment below. I want to hear from you. Let me know that you enjoyed listening to the video. Ask the question like I mentioned earlier in this video if you feel that there's anything that I haven't answered that's kind of circling our national environment today. Thanks. We'll be back again next month with your local market update.